You're looking good, mate. You got a
Thanks,
tie
man.
on. You're looking rocking and rolling.
I'm feeling like I'm overdressed, but hey.
Okay.
Here we are.
I'd put a tie on if I had one. Cool. All right, we good?
We are good, man.
All right. Hey, everybody. Thank you so much for taking just a moment to check this video out. The man that is above me up there, his name is James. You might have bumped into him along the way in Illuminates Travels. He works with a number of our clients when it comes to their financial planning needs with investment, insurances, cash flow budgeting, and just planning for their future goals as well. The other week, James and I caught up over a beer and he let me know about some significant changes to do with income protection insurance. And whilst I'm not one to spruik anything really at all, because I don't like that whole hard sales thing, the changes that he's identified actually impact myself and a large number of our clients being business owners significantly. So without me mumbling and bumbling all the way through it, James, how about I handball up to you and I'll let you take this over and I'll go from there.
Thank you very much, mate. Appreciate it. And hi, everyone. So jumping straight into this, then, as of 31st of March 2020, we're going to see some massive changes in particularly the income protection space. Now, that's huge for self-employed people. It's huge for people with variable incomes. And it's huge for just, those people that have a super heavy dependence on their own income, whether they're single or alternatively, they might be the major income earner in the household. The significant changes, there are two that really stand out. The first one is that the gold standard for income protection policies right now is that you can get paid all the way to age 65. So if something goes wrong, you're paid basically for your entire working life to replace the income that you would have earned over your entire working life. The proposal is to change that to 5 years. And when I say proposal, like that's going to happen as of 31st of March 2020. Awesome. So that means that that replacement income will last for a period of 5 years, but thereafter there's no entitlement after that, or there's nothing payable, which is huge for anyone who's on long-term claim because your life.
So say I get hurt, like I'm 34, say something happens to me during this year, touch wood, and for some reason I can't return to work for more than 5 years, say 20 years, whatever that looks like, and say I would be getting a payout of, I don't know, 50 grand a year as a result of that. It would cap that at 5. So I get 5 years of 50 and I wouldn't get the extra 20 years of 50,000.
That's exactly right. Yeah. Yeah. So, very, very nasty compared to how they used to be. There are things you can do. You can set up like total and permanent disability policies and things in case you can never work again. But still, it's a problem. So that, to confirm, that's one. But the bigger one relative to self-employed people or people with variable incomes is that currently policies are what we call, they're on what's called agreed value terms, or they're available. And that means that you and I, both self-employed people, we can lock down our income and basically agree that the contract agrees that we will get paid based on the amount that's predetermined at the beginning when we take out the policy. Now, what's going to change is that all those policies, going forward, you'll only be able to get what's called an indemnity style contract, which means that it's not so much around what's agreed at the beginning. It's based on basically what your income is when you make a claim. So simple scenario, as a business owner, you might have a year whereby perhaps profits are down, you don't quite get the contracts you're after. You might have a year where you just are in growth phase, and that means that you're not taking the profits, you're reinvesting it all back into the business and trying to grow. If you were to have a claim straight after like a year or a couple of years like that, that really healthy, let's say $10,000 or $15,000 a month income protection contract that you've had and been paying the premiums on for however long, that might, when you go to claim on that, you might only be eligible for $5,000 or $6,000 a month because of what happened over the previous few financial years. So if you have variable income, it just, it really sucks. It's a get out clause for the insurer in the sense that they will pay you the lesser of the two. So it just can't work out better for you as the consumer to hold that style contract.
So that's heaps of examples. I've gone and incurred some business debt and I want to focus on paying that down as fast as possible. So I'm not going to draw out money for myself.
Yep.
It could be that I'm investing in my people, expanding my team before I need to. So therefore profits are dropping. Mm-hmm. I'm bringing new product out. I've had to do a lot of sales and marketing activities. So it could be standard business growth stuff. Or it could be things like I've taken time off to start a family. And as a result, I got maternity leave or paid parental leave, and then I decided I didn't really want to come back in as much initially before I come back in. So that could be for employed or self-employed people that are starting a family, couldn't it?
Absolutely. Yeah. Even for employed people, if your income is variable based on bonuses and you're doing incredibly well right now,
Yeah.
yeah. Or alternatively, if you're employed, but potentially at some point in the future, you might go self-employed. Like we're both in the same boat, I know, in the sense that when we started our businesses, you take a massive pay bump, like a pay hit.
What are you talking about?
I was just rocketed upward from day one. Well, hats off to you. I didn't experience that joy. So, so in that situation, like if you were to claim straight after like starting your own business and not ultimately having zero to very little wage, well then in indemnity contractors, they pay you 75% of based on what your wage is right now. And if that's zero, then your entitlement is zero.
That's super rough. And if you're listening to this, clients or humans, this is a really common thing that we find from a tax planning perspective. We might be paying wages or not paying wages, paying it out as a profit share. You might be utilizing family for distributions of that profit share for tax or risk purposes. So there can be a lot of reasons why something makes absolute sense from a tax or a profit perspective. But when insurance comes in play, it's pretty messed up. So it sounds like there's definitely something to do here. So you said 31 March is the date that it comes into play. So does that mean we can deal with it now and we can kind of still get the old rules?
That's exactly right. So if you haven't applied for cover before the 31st of March, applications into the insurer, everything's ready to go. It's not to say the policy has to be enforced then, but if we haven't applied then or by then you're on new style of, ultimately lower quality cover. I would stress though, for anyone who's interested, like by all means, I'd love to hear from you, but even if you've got your own plan or your own advisor, just go to them and have a chat about it. So, and do it soon, because it's not just a case, if I come across someone in the street today and they say, hey, can I get that done today because it's the 31st of March? The answer is no. There's just too much to do to organize it all for you. We need some runway time. So if this resonates with you, then make it a priority.
And presumably, financial advisors and insurance brokers are probably going to get a lot of people banging on the door in the last few weeks of March as everybody starts realizing, crap, I haven't organized this yet. So definitely look to get on the front foot. For those of you out there, income protection insurance is tax deductible to you if you have it as an individual. Is it expensive, James?
Yeah, look, it can be. Really, it's as a function of your wage. If as a house rule, you might be talking about somewhere in the order of 2% of your salary, something like that, depending on the contract. If you get it depends though. If you were a really, really high, like a labor, like a high, heavy manual role, your premiums are going to be higher than if you sit behind a desk and and you're only get paper cuts, and that's the worst thing that happens to you in the office. So it does vary. It's very rarely a $20 a month sort of thing. But having said that, if people want to get a sense for the cost of it, I'm happy to run the numbers and let you know specifically what it would likely cost for you.
Cool. All right, just to summarize that, pack it in so we can finish up now. Two massive changes. One, how long you can claim for, and two, how much you can be claiming for. It impacts anybody with variable income, be it self-employed who are going through growth and not pulling out, people who are stopping and starting work for family or travel reasons, and it can impact employed or self-employed people as well. It is tax deductible. It's something you want to jump on relatively soon, and you should be taking into account, I know you did mention this, but I know you know it. We should be taking into account your full insurances, not just income protection and ignoring life and TPD and the other ones at the same time as doing it. So it's something you want to have a bit of a perspective on. Obviously, Illuminate, we are not financial advisors, so we're not in the business of giving advice. What we've talked about here is all general in need. You should be seeking specific advice from your financial advisor. If you don't have anyone in place, we can connect you with that guy there, James, or a couple of other people in our network that can service you if that is a better fit for you. So reach out to us, reach out to James. On the email that you've received there's a link that puts it into James's calendar to hook up a time. If you want to contact me directly and have a quick chat with me beforehand, you're more than welcome to do that as well. Any parting words, mate?
Yes, thank you everyone for dialing in. And also I'll just include a couple of slides in that email too, which will just reinforce what we've gone through.
Perfect. All right. Thank you, everybody. Have a great one.
See you guys.